Mm. All right, looks like we're live. So, my name is Alicia Brown. I'm with Remax Town and Country, part of the Black Swan team. My husband Roland and I work together. He actually got called to another meeting right now, so he was going to join us, but he hopefully will maybe step in at the end if he can. But we have Rich McDowell here today. He's been gracious enough to join us and kind of answer some of our lending questions. I know that's a hot topic for a lot of people. So he's here to kind of explain to us what exactly the process entails and kind of prove to everyone that it's really not as scary as it sounds. But a little bit about Rich. He's been in the lending industry for a little over 13 years. He works for Synergy One Lending. Before that, he was in the U.S. Army. Is that right?
I was, yes.
Yeah. Awesome. Well, thank you so much for your service. We really appreciate it.
Crazy times.
Yeah. But Rich and I have worked several times together. His team is amazing. Funny enough, he actually saved one of our clients recently. She was not able to get funded through another lender, and so last minute we kind of brought it to him and showed it to him and said, hey, can you help us? Can you make this go through? And he's like, yeah, definitely. And I mean, what, you guys closed that thing in what, less like a week?
It was quick.
It was fast. I mean, this other lender couldn't get it closed, and his team just was incredible. They had that thing done and in ridiculous time. And so I was so happy. Our sweet client was able to move into her house, and they just saved the day. So he's really good at what he does. So I want to definitely put a plug in there.
No, thank you.
But yeah, so we'll go ahead and get right into it. If anyone has questions, feel free to post your questions. If I don't get to it right away, I'll definitely scroll back through, and we want to make sure everyone's questions are answered. But we may even do a follow-up call later if it starts to get a little long. But just kind of get started. The reason why we invited Rich to kind of answer some of your questions is I know that in the home purchase process, the lending is kind of the sticking point for a lot of people. Everyone's excited to go look for a house, talk about what they like in a house, all of that stuff. But then the minute you bring up, well, have you talked to a lender or have you thought about the lending? All of a sudden, everyone like panics. And so it's kind of a lot of different things. I think there's a lot of stuff people just don't understand about the process. People get scared when they think, oh my gosh, like someone's going to be looking at my finances. What are they going to think about me? Like, I'm not really where I want to be, and I don't want anyone judging me. And so I think there's a lot of that involved. And then, I don't know, there's just a lot of different things. So today we're going to kind of go through all that, talk to Rich, show you that there's a person on the other end of that who's not judging. He's here to help, and hopefully kind of make it not so painful of an idea when it's time to get that done, since that is technically the first thing that we should be doing before we search for a home. So Rich, if you could go ahead and just kind of start us with what that first initial process is. So if I say to a client, hey, we're ready to start looking at houses, go talk to a lender and find out what you're qualified for. So if they were to call you up, what would happen at that point?
Yeah, and I really appreciate that introduction, Alicia. What I would tell you for me that's important, this is by far the biggest singular investment people make. Mm-hmm. And I think too often we take it for granted. We think it's easy. It's just a payment. But as you and I both know, is, there's things that go on with owning a house. There's a pride thing that goes on, a neighborhood thing that goes on, all that sort of things that go on. My goal, and I think where you and I and Roland have worked so well together, we want them 6 months after they close to really appreciate the home buying process. When they're sitting there and it's all said and done and their house is finally put together and all of that, they're sitting there and enjoying it, thinking about what a great investment it was for them and a process it was for them. So right. where I've through the years where I've really seemed to make that easier, if you can make that connection early and understand their goals, right? And meaning that just using some unique numbers here, let's say 250. We're going to go buy a $250,000 house. Well, why? Is it because that's what you think you can afford? Is that why the payment you want to do? Is that a neighborhood that your friends live in that you're like, yeah, I don't want to pay more than 250 on that? What is that? Why is that the magic number? Because I think there's some new strategies and new structures on down payment, on closing cost, on taxes, on insurance, all the things that play into a mortgage payment, which is ultimately what you're responsible for each month.
Mhm.
And so we really try to understand what the client goes for, right? Dallas Fort Worth, decent apartments, 18 to $2,200 a month. You can get a pretty awesome house for 18 to $2,200 a month, and
Yeah.
so if it's
Sure.
just trying to stay in that mindset, it's truly understanding from the client's perspective. And I would say, especially first time home buyers, you, me, and them are all on the same team. We want them
Right.
to get the house that they want. Uh, Upon popular opinion or belief in the past, the lenders don't want to ever say no. We want to say yes just as much as everybody else wants to say yes. But we're held to a standard that they have to have the ability to repay the loan. And so
Right.
that's the tricky thing, right? Is, are you in a contract job? Are you in a self-employed? Do you own a company? What is your financial aspect today? And then how could it change or improve as we go through this process?
Right.
So for us, I want to talk to them. Yes, technology is beautiful. You and I have worked with that. I'm like, hey, have they filled out our app? Have they done this? Have they done that? But let's talk to them too, so that they do know that we're a live person on the on the other
Right.
side of the phone, right? So, the initial process, let's talk 5-10 minutes, and then ultimately let's fill out the application and then tell them what they can do. And so
Mhm.
that's really how my process is. And I think it works well for them, because then it's not like, well, I just heard interest rates are low. We can actually show them what interest rates are.
That's fantastic. Now, I know that one concern a lot of people have when they go to apply is they're really nervous about their credit score.
Right.
So, how does applying through you or multiple people, because I always recommend, I'm like, call several lenders, make sure that
Right.
you're getting the best deal, compare everyone. So they're like, well, if I go call like 5 lenders, what's that going to do to my credit score? So what do you usually say to that?
Yeah, no, it's a great question, and it is something that's very concerning for us all. I joke and say, if I'm ever king for a day, the one thing I want to do is we all have the same credit report, meaning that there's Credit Karma, freecreditreport.com. There's other credit entities that we have access through, whether it's our credit cards or just, whatever the case might be. Those are consumer facing scores. They're not
Hmm.
based on an algorithm that a lender uses to lend money on a $250,000 house. So what we tend to see is there's some that are fairly comparable to our credit scores. Majority of the free ones are not. And so a client might say, "Hey, I'm with said credit company, and my credit score is 700." Well, then when we
Hmm.
get it, let's say for argument's sake, it's 650. So that draws confusion to the client right from the beginning. Like, why are you showing me I'm 650 when this entity tells me I'm 700? So it's an education standpoint on that.
Hmm.
The the history of what I would tell you in this piece of credit score in general is, if Rich's lending company, you pull credit, you go to another competitor, they pull credit, you go to another competitor, they pull credit.
Hmm.
I'm going to tell you, by the time you've gotten to 2 to 3, we're all going to tell you the same stuff. How we get there might be different. What our verbiage and vocabulary is might be somewhat different. But at the end of the day, if you tell me that Rich pulled your credit and you're 700, the next person that pulls your credit, you're going to be 700. Where the concern comes on how many people should pull your credit is, and again, just common sense on this piece. If I have a car dealership pull my credit, and then I have Nebraska Furniture pull my credit, and then I have Rich pull my credit, I've got a lot of people pulling my credit. And just because you get your credit pulled, nobody knows if you have credit taken out.
Hmm.
So those hit your credit harder than if you have 2 or 3 lenders pull your credit. I would tell you for me, and I think this happened in that situation you were talking about, let's talk to the client first, find out why they're not able to get them done before we just go pull the credit. I don't want to pull credit if I'm not somewhat confident that there's an opportunity to help the client out, because we do want to protect that.
Perfect. So at what stage, if they were to pick up and call you on the phone, I know some people get really worried. Well, if I get on the phone and call him to get this process started, he's going to pull my credit right away. So at what point do they need to be comfortable with the fact that you will at that point be pulling credit?
It goes back again to the conversation with the client. If you and Roland need an approval letter today to go see a house because the seller's required that, I legally cannot give an approval letter without seeing the picture. And so I need to tell them that, right? It's like, hey, I'm going to pull your credit. Your credit's good for 90 days. You're 90 days from the time I pull it. I don't have to pull it again. You've got 90 days to shop and close.
Which is great.
At that point, that's hopefully, and again, hopefully we do enough to earn the business where it makes sense to them, right? And I think too often the internet and others, oh, you should ask for this, and no, you should ask for that. Everybody's story is completely different. Somebody that tells you they got a 2.99 rate might have bought it down. They might have, put more money down. We're not maybe comparing an apple to an apple. And so therefore, talk to your lender and get that information, and we should be able to give that to them.
So that kind of brings me to the next question is, if everyone is kind of shopping around for different lenders, and so they may get a quote from one lender that says this and then one lender that says this, how do they compare those to see, okay, like you said, this person bought down the rate or something? So can you go a little bit more into detail about what that even means? Because some people
absolutely.
What does really even talk about?
So one of the tools that we use is Mortgage Coach, and that gives us the ability to give the client up to 4, I call them strategies, 4 different loan strategies, and how that would go is, let's look at it as first time home buyer, conventional purchase, good credit, 3% down. So they can get into a house 3% down, first time home buyer. The second one, maybe use it with 5% down. Then 5% down with a lender credit, and I'll get to that in just a second, or 5% down and you get to buy the rate down. And so what it does is, we hope the value of that for us is you shop us against us, not us against the world. 3% down, call it 3.5 or whatever the rate is. You're not buying the rate down. You're getting what par rate is today. The 5% down, you're going to get a little bit better rate, a little better PMI, because you're putting more skin into the game, if you will.
And can you quickly explain to people what the PMI is?
Yeah, so PMI is private mortgage insurance. It's required on all conventional loans that do not have 20% of equity. And so the lender requires that. And, this might be another topic for another day if our clients find value in it, is to talk about strategies on how to buy that out, how to do a single pay time and things of that nature. So there is some structure to those that you can get rid of. Right. But it's basically an insurance on the home because you didn't put 20% down.
Excellent. Thank you.
These strategies 3 and 4, let's again say strategy 3 is we do, a 3.5. And at that rate, it is actually given a lender credit. A lender credit's coming from us. So it's above a certain point. You'll see, hey, you're getting, in a scenario like this, $500 for a lender credit. And so that's $500 off of your closing cost at closing. The other one would be, let's say 3.25, but the cost of that would be $1,000. So the client would have to pay $1,000 to get that 3.25. But now they understand when they saw that online at 3.25, that's the reason, right? And so there's a lot of big banks these days. If you go to their front page and you check rates, have the assumption that you're paying an origination, you're paying a discount, your loan size is XYZ. And so it's got all these assumptions. And if you don't fit into this box, you're not getting that rate either. but the rate
Hmm.
gets you excited to reach out to them.
Right, right.
Right. So it's there's not a magic pool of one lender over another lender on where to get the money.
Excellent. Well, thank you for clarifying that.
Oh, you're good.
And then wrapping back around real fast to the credit scores, what credit score are you seeing right now that people need to kind of aim for to make sure they can even get approved for a loan?
Great question, and that's one that's been a little ticky with this COVID-19, if you will. A lot of lenders still remember 2008,
Hmm.
and none of us want to go back there, and so we're really cautious on making sure that we're making great decisions that do not allow the mortgage industry to be a reason why the economy tanks. That being said, is typically if you're over 620 in a credit score range, there's opportunities for you. Uh, Talking to a buddy of mine within the company, and he was able to get a 630 conventional loan, and
Wow.
so there's strategies that are out there. We just have to work with them, and so that kind of goes back to maybe tap onto another answer earlier. Sometimes us taking our time to answer a question if a borrower can get approved is we're doing our due diligence to make sure that we've uncovered every stone to give them all the options. Back to the government lending piece, so your FHA, your VAs, your USDA, they typically have all increased their scores to 640,
Okay.
which 2 months ago, 580, a lot of lenders were at 580. And so then if you look at it and you're like, well, but as individuals are getting maybe laid off or put on hold to work and things of that nature, the lenders have to do a job to protect the people's ability to repay these loans.
Right,
And
right.
so I don't think they're going to be forever, but I think today, if you look at it and say anything over 640 to 850 is perfect. I know there's some rumors out there, back to your credit question about, oh, well, 950 is perfect. No, for lending credit, 850 is perfect. And in my career, I think the highest I've seen is 832.
Oh, wow.
So
Well, there
pretty
you
good.
go.
But typically if you're over 740 to 800, you're getting a premium rate. So it's not like you've got to be perfect to get that premium rate.
Fantastic. And as far as we kind of touched briefly on the down payment option. So I know a lot of people have always thought you need 20% down. That's all we've ever heard. But I know that there are definitely options in that 3% range. Can you go a little bit more into detail on that? Because I know that a lot of people get really concerned. They're like, well, I haven't saved up as much as I want.
Right.
Can you go a little bit more into what is realistic that people need?
Yeah. So what I would tell people, just across the board, if you're trying to do it all on your own, and when I'm saying all on your own, no gifts or things from your families, no, just me personally having all the money. If you're a first-time home buyer, you will need 3% down if you qualify conventional, or 3.5% down if you qualify FHA. And that 3.5% and 3% is of the purchase price. So when you look at it from, let's use 200,000 as an example, 6,000 to 7,500 for down payment money is what you need. And then I know we've structured some deals. We can get creative back to the lender credit and things like that, where you cover some of the closing costs. I tell people, as far as just kind of a rule of thumb, if you're at 7 to 8% of a purchase price, that meaning you've got assets in 401k, you've got checking savings, you've got family that can help you. If you're in that 7 to 8% range of whatever you're buying, you will not have a challenge getting qualified for covering closing cost and down payment money.
Fantastic.
And so that's typically the rule of thumb, I guess, if that answers your question.
Okay, yeah, no, that's really helpful. So let's kind of step back to our process again. So they pick up the phone, they call you, they say, "Hey, I need a pre-approval for my home." So they have that conversation with you about what they're looking for, what they're needing in the home. And then you guys kind of discuss what you have to offer.
Right.
So at that point, you provide them with the pre-approval letter so we can go ahead and put an offer on a home. So then we write everything up, their house gets their contract gets approved. So what do they do at that point? So
No,
they're going to call you up, give you the contract, and say we're good to go. So then what do they need to expect at that point?
yeah, so that's a great question, right? So hopefully in that whole process of them finding a home and all of that, we've got all of their documents already. So all we're waiting on is an approved contract, an executed contract.
And
We
what are
get
you
the
requesting for documents? Sorry.
so harder question to answer as kind of a one size fits all. There
Mhm.
are Our goal from a lending standpoint is to ask for the least amount of documents we possibly can. That's dictated by the type of loan you get approved for and the type of borrower we have.
Okay.
Uh, and so we can dive into that, but that's kind of going to be a more unique process for each borrower. Um, Anyways, that being said, you give us the contract, it's executed. We have 3 days from an executed contract to get that disclosed to the borrower. What does that mean? We lock the loan, we get all of our I's dotted, T's crossed, and we send them electronic documents to e-sign. That gets the process started. That's when they kind of make the commitment that yes, Synergy One and Rich McDowell are our lender. They sign them, we get them back, and then from that process, you're working on your option period, you're working on repairs and all of that. We are working on ordering the appraisal, getting the file submitted to processing. Processing has typically 2 to 4 days to process the file. That means verifying employment, verifying assets, verifying all the information that we've gathered.
Mhm.
Once that's done, we submit it to underwriting. Underwriting typically runs, quote unquote, good times, 2 to 3 days. Okay, so 48 to 72 hours. So you submit a file to underwriting today. Goal is by Friday, we have an answer back from an underwriter that the loan is conditionally approved.
Mhm.
So by that time, right, we've gone through option, we've got the appraisal ordered, we've got a loan approval from underwriting. We clear the conditions from underwriting. A lot of them are going to be title, property, appraisal, all of that sort of stuff. Occasionally, we need some additional documentation from the client. Something showed up, something happened, whatever. Once that gets in, we get the appraisal made value, which is perfect. We've got through option, we've got all the information from the client. We submit for what is called clear to close. That typically, again, 24 to 48 hours in underwriting to clear the file to close. Then in that process, the borrower expects a closing disclosure. That gets them to letting them know that there's not going to be any surprises at closing. Here's your final loan amount. Here's your final cash to close. Here's your wiring instructions to wire it to the title company. And then, let's assume that's a Monday. By Friday, we're closing and funding the loan, and the borrowers get their keys. Everybody's excited.
Perfect. Yeah, we always like that day.
Yeah, right.
Everyone's excited for that day.
Right.
A long time coming, right? No, that's perfect. The other thing I thought of while you were talking is what types of things do people need to avoid while we're in that kind of limbo process where we've applied, it's in the process, and before we close, what types of activities do people need to avoid as far as their spending habits?
No, absolutely, great question. So, and it's one that's gotten us several times. But if a client says, for instance, they have a consumer credit card at a retail center, if they put money on that, that is not going to affect their approval. As if they go and get, hey, they offered 0% down because it's perfect time of the year and they're trying to get people's business, and I bought the whole house of furniture at 0%. That will kill us, right? And so what we tell people is you do not want to acquire any new debt until we've called you and said, hey, your loan is funded, you own the home. And so I think there's a understanding, I guess, is if you have credit cards and you utilize those credit cards during the process of it, that's not going to affect us as much as if you apply for the 10% discount, at the register. That's going to hurt us and bother us on trying to get qualified. So save your cash, save your assets. If you have existing credit, do whatever you need to do with it, but do not acquire any new debts. No car payments, no furniture, none of that stuff. That, oh my gosh, the company offered zero interest and this was the greatest refrigerator ever and I just had to get it. Get the house first, because if not, you're going to have a refrigerator and no house to put it in.
Oh yeah, yeah, that's fun. Then you're toting around the refrigerator and you're like, dang it.
Right. Right. So
Awesome. Then the other thing I just kind of wanted to touch on, I know we're getting close to the 30 minutes we want to stay within. I mean, we can always, like you said, schedule another call and kind of go
right.
more in depth on these topics. So if anyone has specific questions, reach out to us and we can definitely get on a call to discuss them. But the last thing I kind of wanted to talk about is I know everyone is really concerned right now with a lot of the stuff that's currently going on in our economy and everything. What are you seeing from your standpoint as far as getting people loans, funding the loans, getting things to close? Are you seeing an impact there? Do people need to be concerned, or is it business as usual?
Great question. What I would tell you is it's kind of a collective group per client, right? It's the agent, the lender, the client. If said client gets laid off work during the process, that's going to cause a problem.
Right.
Is it catastrophic? It just depends on debt ratio and income and all of that. What our goal is and what we're trying to tell everybody right now is we're going to base this qualification on you working, your existing situation not changing. If it does change, alert us immediately so that we can react to it. The only big change we've done from a lending piece is on the day of closing, we are calling to see and ensure that the borrowers are still working. Okay. Again, because if you look at what our main job here is, why we want to give the loan and we want the clients to get the loan, our job is to make sure that the client has the ability to repay the loan. We don't want to put people in debt. We don't want to put people in running their credit card, credit scores. So it's our job to make sure that we're, to the best of our ability, we're not putting them in something that they can't pay for. As the biggest thing for the clients, and here's probably the overall thing, go circle back to your first thing, lending, we need to know everything we need to know. Because if not, we will find out. And typically if it's something negative and we find out, we can adjust to it. So if we know it, if it's like, hey, my company said in 2 weeks they're going to lay us off for a month, well, then we need to counter that. We need to say, okay, do we need a longer extension period? Do we need a longer this? Is this going to be a problem? Are you still getting paid even though you're not at the office? What does that look like for you? Mm-hmm. And knowing that the only thing that we're really wanting to do is make sure that they love that home at closing and can afford to pay for it.
Okay.
So I think that answered your question.
Yeah, no, that's helpful, because I know a lot of people are just kind of scared that things just aren't even happening, and right. but we are seeing that things are still funding, things are going right. through, that we're just taking a little bit more precautions.
No, absolutely. And again, this is, I don't think any of us were around in 1918, and I think it's unique times. And I think we've got the same confusion and the same stress that everybody else has with it. And hope to goodness that it gets resolved quickly.
We hope so, right?
Right. For my kids' sake, because they need actual teachers.
I know. Oh gosh, we're trying our best, right?
Right. That's right. That's right. They're becoming great lenders.
There you go. Teach them what you're good at.
Right.
That's awesome. Well, we really appreciate you coming on and just kind of answering some of our questions and going over a lot of the things that kind of are worrisome to some people. But like I said, we can definitely schedule something another time that we can kind of go a little more in depth on some of those topics that kind of trip people up. But can you give us your email and phone number real fast in case people need to reach out?
Yes, absolutely. So it's Rich McDowell, and the cell phone is 214-228-4114. And so again, that's 214-228-4114. And then the email is going to be rmcdowell@s like in Sam, one, the number, lending.com. So s1lending.com.
Perfect. Well, thank you, Rich. We really appreciate it.
And I
And
appreciate you guys.
we'll definitely schedule something else and go from there.
Well, sounds great. Thank you so much. I'll stay safe out there.
You too. Bye-bye.
Alrighty.